Let's talk a little bit about what we're seeing in Japan, Mark. Your take on it, is it an overreaction? Equities up very, very sharply. Decent move in the yen, decent move in JGBs.
I think it's the correct reaction. I think it's an appropriate reaction. Not necessarily an overreaction, but this isn't the start of sustainable trends. So we've got a likely new prime minister who is much more in favor of kind of fiscal expansion. And certainly to get that kind of coalition, that's what she's going to probably have to offer out there. What I think is probably a little bit more debatable is the narrative that this pushes back the BOJ rate hike cycle significantly. I'm not sure that's the case. On the campaign trail, she made very clear, that she wasn't going to interfere in the BOJ's monetary policy. That's up to them to decide. And I think that she'll probably have to stick to that line to get that coalition of support from the opposition parties. So what that means is we probably do get more fiscal stimulus in Japan. That means it's positive for equities, as we've seen. And we probably get the BOJ not hiking in October. In my mind, that was already up for debate anyway, but they probably will hike in December. So it's just a little bit delayed. So that's meant some yen weakness, but I think ultimately the yen probably stabilizes pretty soon because we're going to get fresh inflows into the equity market there. And I think we will see greater steepness in the curve. And at some point that might bring some inflows back into the JGB market. But that is where we probably got the global theme coming in here, that the long end yields in Japan have surged higher. Given what's also happening in the French news flow, this is kind of returning. And of course in treasuries with the ISM prices paid, we've gone back to a global theme of long end bond yields rising. It was only a temporary relief in that story.
Well, with that backdrop in mind, Mark, are you still a fan of seeing more dollar weakness as we head into the fourth quarter, or is this something that could perhaps tempt your view that might be abating?
First of all, I very much believe in the longer-term dollar depreciation trend. I think it's an expensive currency that the world is overexposed to, and some of its long-term advantages are being eroded. However, short-term, I'm not particularly bearish the dollar. If I was forced to make a short-term trade, I'd actually be more biased for dollar strength for a bit of a bounce right now. I think that some of the factors around dollar weakness are very long-term, and people are over-positioned for them in the short term. And I think there could be a bit of a short squeeze, and maybe prompted by this dollar yen, it's kind of helping that narrative that we get a bit of a dollar bounce here. So short-term fourth quarter, I think dollar can probably do okay. I'm waiting for a new catalyst to get bearish the dollar again, but the long-term trend is very clear.
What about the read across globally from these Japanese moves, Mark? We were warned, I think it was by Goldman Sachs, that you could see 2 to 3 basis points higher in Germany, US, UK bonds from the JGB moves higher at the very long end. Are you surprised by what we've seen in terms of the read across so far this morning?
It's definitely been quite punchy, but I expect that this is going to be a global theme. I think that story is back in the kind of focus this week. So we've got not just the Japan story, which is a valid reason for long end yields to go higher. We've got a 30-year auction. I think it's tomorrow. Better check that, but I think so. We've got the French election situation. Gilts have got some structural problems. And as I said, prices paid in the US. There's an inflation concern there, even if we're not getting data. So this is definitely validly global.